Major changes could be coming to your 401k. President Trump signed an executive order aimed at making it easier for retirement plans to offer riskier investments. Think crypto, real estate, and private credit. With private credit in particular, we have seen retirement plan providers being sued historically for offering such high risk, high reward, and high fee options to investors. This executive order could potentially lower that risk of litigation against plan providers and potentially could open up more access to riskier asset classes at the same time. Extremely simply, private credit is the option for investors to back private companies. These private companies don't have credit of their own, so they can't go through a bank to get loans. Instead, they seek out capital from investors. There's a potential for really high rewards with that model, but it's also very high risk, and the fees associated with it are also really high. Retirement is, for most people, the biggest investment of your entire life, and that may not be the area of your investment portfolio to play with things that are so high risk. Why is it so risky? Well, for a lot of reasons, but one of them is that private companies are not required to give you all of their financials. They don't have to do those quarterly earnings reports that we talk about all the time with public companies. So you're not having the transparency to look into corporate financials and do the due diligence necessary as an investor. Now, who's excited about these offerings? The private credit providers, KKR, Apollo. They want a piece of the $12 trillion invested in U.S. retirement funds. Even if just 5% of those retirement funds go to private credit, that could be a windfall of $600 billion for those companies.